Where is the American economy headed to? Is it going to get better, or are there any worse times ahead of us? Is it wise to invest in gold in these uncertain times? Has the pandemic created more economic damage than what meets the eye? Well, if any of these questions are plaguing your mind, look no further. We are here to answer it all, or at least try to explain it all. We are going to delve into the mind of the living encyclopedia on the world economy, a renowned author, lawyer, economist, and finance expert, none other than Jim Rickards. From a multi-billion-dollar bailout to predicting the 2008 economic crisis, Rickards has done it all. His words are not just restricted to Wall Street honchos, but the U.S. Department of Defense as well. Stay tuned to know what he thinks is in store for us. Welcome to our channel, and in today's video, we are talking about renowned economist Jim Rickards and his predictions about the current situation of the U.S. economy. But before we dive into the world of dollar bills, please make sure to hit the like button, the subscribe button, and the bell icon to never miss a video from us. Alrighty, with all that said and done, let's get right into today's topic, shall we? James G. Rickards, better known as Jim Rickards, spent 35 long years of his career navigating the highs and lows of Wall Street. A renowned economist, he has held high positions at companies like Long-Term Capital Management, Citibank, and Caxton Associates. Rickards is well known as a media commentator and is the author of several bestsellers on finance. He published his first book called Currency Wars: The Making of the Next Global Crisis in 2011, followed by 6 other books. Apart from contributing the opinions and editorial pieces in publications like New York Times and Washington Post, Rickards is currently the editor of a financial newsletter called Strategic Intelligence and is the director of the James Rickards Project that delves into geopolitics and global capital. During his tenure as the general counsel of Long-Term Capital Management, he architected their bailout. Rickards had to constantly negotiate with the heads of major banks like Goldman Sachs, J.P. Morgan, Merrill Lynch, and more. He saw how close the system was to a complete collapse. The $4 billion bailout averted the looming crisis, but Rickards was now determined to understand what went wrong. Can you imagine how long it would have taken for the U.S. economy to recover if the bailout didn't happen? In an interview with Octavian Report, he said, "I spent the next 10 years working on this, about 5 years figuring out what was wrong, where the flaws were, and another 5 years figuring out what actually works to remedy them. I refined my models enough that in 2005 and 2006, I was warning people that a collapse was coming again, that it would be worse." His prediction came true when the Lehman Brothers crashed in 2008 and the world economy came to a standstill. He didn't know how or what the collapse would exactly look like. He didn't know which firms were going to fall, but his decade-long study on economic depressions gave him enough information to understand that another crisis was near. Rickards believes that all central bank models and all the risk management models used on Wall Street and around the world are outdated, and another collapse is inevitable. The next crisis might happen in 2025 or after that. He warns that the upcoming crisis will be much bigger than the one we faced in 2008. But how does he predict it? After his first tryst with a possible economic collapse, Rickards created his own toolkit to understand the system better. His toolkit might not be as heavy as the one in your garage, but it holds more intellectual weight for sure. He uses complexity theory, behavioral psychology, and causal interference. He uses physics, psychology, and applied mathematics to accurately predict economic trends. But don't worry, he also added that when he talks about the collapse of the international monetary system, he doesn't think it's the end of the world. He just thinks it's the end of a system that has collapsed 3 times in the past 100 years. Rickards adds that there's nothing unusual about breakdowns in the international monetary system, and that when it happens, the major trading financial powers get together, sit around a table, and rewrite what they call the rules of the game or the operating system. He believes that without a major reform in the operating system, we are headed towards another collapse soon. The U.S. economy had only recovered from the 2008 blow when the global coronavirus pandemic dampened things further. In an interview with the head of GoCo Group on June 1, 2021, he said that the lockdowns had a major impact on businesses worldwide and the pent-up demand wasn't going to solve it. He explains it further by stating that 2020 saw a major downfall in the economy, but the rise to get back to the numbers we saw in 2019 was going to be much slower. Despite the growth in the last quarter, it will take a longer time to rise back from the depression. Rickards also stresses on the behavioral changes caused by the pandemic. It was a major jolt to our daily routines, and people adapted to it in the past year. Now that things seem to be getting back to normal and most countries worldwide are lifting lockdowns, the change in consumer behavior will impact the demand and supply cycle. It will further slow down the growth. The behavioral effects of the Great Depression subsided only in the late 1960s. That's how long it might take for us to recover from this depression as well. Even small decisions like staying home and cooking rather than dining at a restaurant can have a large impact on the economy. More and more people are now choosing quaint evenings at home and remote jobs rather than going out and spending on leisure activities. The political and economical uncertainties worldwide have caused people to adopt a savings-driven approach. It might seem like a safe bet, but the overall impact of this has negatively impacted the economy, with the velocity of a dollar coming down drastically. For Rickards, inflation is not what should worry us. It is the deflation that'll cause a larger impact. With inflation, the value of the dollar will rise, which will benefit us in the long run, whereas deflation might cause a rise in taxes. None of the scenarios look appealing, but inflation has a greater benefit to the economy. But not all is lost yet. Despite the depressed growth and the economic slowdown, Rickards has some pearls of wisdom for investors. An obvious impact of behavioral changes caused by the pandemic will be visible in the residential real estate markets. People are now reassessing their priorities in life, and the high population density, pollution, and crime rates in cities make them a dismal option to live in. As a result, more and more of the city dwellers might opt to move to the suburbs or the countryside. However, commercial real estate is not a good place to invest in right now. The pandemic pushed people indoors, and the remote work culture has already caught on, which has made a sizable impact in the commercial real estate market, with several offices shutting down. He advises investors to allocate 30% of their portfolio to cash, as it decreases the overall volatility. Bonds and gold might have a higher yield, but cash is a safe bet in the longer run. The only risk cash faces is deflation. But what happens when deflation hits? To save yourself from deflation, he suggests investing in gold and precious metals. According to Rickards, investing in gold is a smart option since it also performs well in deflationary times. During the Great Depression, gold prices rose by 75%. So if another economic crisis is on its way, you can rely on gold to get you by. Now, are you planning to hoard some gold too? He also predicts that high-quality government bonds will also continue to do well this year. Equities are a volatile investment right now due to their bubble characteristic. Rickards points out that the CAPE ratio for the US equities market is at its second highest ratio. The highest CAPE ratio ever recorded was right before the dot-com crash. The equities bubble might burst, but it might take a while. In terms of investments in cryptocurrencies, Rickards is not sold on the whole Bitcoin hype. But he does feel that cryptocurrency will destroy the concept of the US dollar. He says the dollar, the yen, the euro, all are forms of money. I would say gold is a form of money. Bitcoin is a form of money. In times past, feathers and clamshells have been money. One of the criticisms of many modern forms of money, of central bank money and Bitcoin in particular, is that they are not backed by anything. Now that you have an idea about what's in store ahead, are you going to stick to the savings-driven approach or invest in gold and residential real estate? We sure hope that you make smart investment decisions. Before you start reassessing your finances and investments, don't forget to hit the like button and share this video. Also, do subscribe to our channel for more videos. Do you think Richard's prediction will come true? Let us know in the comments section below. Till then, keep investing, guys.